Okay, these are some questions on relevant cost. So one of the things I want to emphasize at the outset here is relevant costs have three components. One is they are future cost. Second, they are cash cost, so it's not depreciation. And third, they are incremental costs. Which means they are added costs. So let's look at this question here. This first case is we have some material that originally cost $74,600, scrap value of $57,400 as is. But if it's reworked, it would cost us $1,500. So that would be an outflow, $1,500. And it could be sold for $54,400. What would be the financial disadvantage of reworking and selling the material rather than selling it as is? So I want you to focus on relevant cost here. Take a minute, pause the recorder, and come back in a minute. Okay, here we are. We're back. We've grounded out some numbers here. Under the scrap alternative, we can sell the product at $57,400, and that's it. Under the rework, we can resell it for $54,400, but it's going to cost us $1,500 of additional work. So that's a subtract. So our net advantage there is $52,400. Our overall advantage is a $4,500 advantage under the scrap alternative. And our incremental cost here would be the additional work, and our incremental revenue would be the revenue of selling the product under the scrap alternative and the revenue under reworking. The problem is that the rework alternative, the revenue just isn't high enough. Okay, absorb that one and we'll do another one. Okay, here's another relevant cost question. And this question asks us, what is the relevant cost of 780 liters of this raw material when deciding how much to bid on the special order? So we already have 640 liters of this raw material in stock that originally cost $8.30 per liter. And this raw material is used in the company's main product and is replenished on a periodic basis. The resale value of selling the existing stock is $7.60 per liter. New stocks can be readily purchased for $8.35 per liter. What is the relevant cost of the 780 liters? Okay, so we have originally cost $7.30. This is original, and it's used in the company's main product and is replenished on a periodic basis. The resale value of the existing stock of the material is $7.60 per liter. So what is the relevant cost? Pause the recorder, think about that for a minute, and I will come back to you. Okay, here's our analysis of this question. We're going to use the $8.35 per liter number because that is a future cost. New cost can be readily purchased for $8.35, despite the fact that we have cost in there of $8.30 and the resale value of the existing is $7.60. That really doesn't matter. That's not relevant for us. We're going to focus on the future cash cost of the product. So 780 liters times $8.35 per liter is a total relevant cost of $65.13. Think about that one per minute and we'll do another one. Okay, here's our next question for relevant cost. And we're looking for the cost of materials for purposes of determining a minimum acceptable price. So relevant cost of the materials in total. Okay, so the situation is we want to use a customer offered to buy 6,500 units of VGI. And each unit requires 1 unit of I-57, and 5 units of M97. And I-57 is in use and is regularly replenished. M97 is no longer in use and will not be replenished. So what is our relevant cost for those materials? We want to buy 6,500 units. We want to sell 6,500 units. And we need, the unit requirement is 1 unit of I-57 and 5 units of M97. Pause the recorder, take a minute, get out your calculator, and I'll come back to you. Okay, so just as a review here, relevant costs are future costs, their cash costs, and their incremental costs, meaning additional costs. So in this case, we're going to work these 6,500 units of VGI, okay, and we're going to look at them from the standpoint of the requirements in raw materials. So 6,500 units of I-57 and 32,500 of M97. So the question is, what cost do we use? We use the $9.40 because this is a future cash cost of that raw material. And we use the $3.50 because we're no longer replenishing it, and we're going to get a disposal value of $3.50 per unit. We already have that, and we have enough inventory because we need 32.5 and we have 33,960 in inventory. So when we do this extension here, our total relevant cost for this question is $174,850 because these costs are future cash costs and incremental costs or revenues. All right, thank you. Okay, another question on relevant costs. We said relevant costs are future, they are cash costs, and they are incremental, which is another way of saying they're not sunk costs. Okay, so in this example, we want to know the relevant costs of 240 kilograms of raw material when deciding whether to proceed for the special project. Okay, pause this and okay, so this question says that this is an old raw material and the special project would require 240 kilos. They originally cost the company $22.12. If we to buy new, it would cost us $9.25 per kilo. However, we have no other use for this and would sell it at $8.35. So that looks like our most relevant cost here if we're not using this project. Also, the sale would involve delivery of $71. So what is a relevant cost? Okay, get out your calculator, pause the machine, and run some numbers. I'll be back to you. Okay, so we're back here and we're looking at this question, and we're going to use the discounted cost of $8.35 because we're not using this as raw material we have in stock. So we're going to use the $8.35 because we could sell it for that level. So that represents a cash transaction of $8.35. And we're also going to subtract delivery because we want to know we have to deliver it anyway. $71 would involve delivery to the purchaser, so that's an outflow. That is a relevant cost. So our net cost of selling this material is $1,933. It's the relevant cost when deciding whether to proceed with a special project. So this is the relevant cost, $1,933. Okay, here's yet another question on relevant costs. And we said relevant costs are future costs, they are cash costs, and they are incremental costs. So in this case, we want to know the relevant cost of 760 liters of B39U. So take a second and take a look at the question, pause it, take a look at the question, and then come back to it. Okay, so the requirement of this question is, what is the relevant cost of this inventory that we have? 760 liters of B39U. Okay, we have a stock of 460 in inventory. So this is an inventory. And we paid this amount. That's a sunk cost. If this were to be sold on the open market as surplus material, it would fetch $5.95 per liter. And new stocks of material can be purchased on the market for $6.45, but must be purchased in lots of 1,000 liters. Okay, we have less of that. So you've been asked to determine the relevant cost. Pause the recorder, think about it, and come back. So we have 460 liters times some cost equals our relevant cost. Pause it and come back. Okay, we're back at it here. So here's the question. Do we use the $5.95, which would be the surplus cost, or do we use the $6.45, which is the open market cost? Despite the fact that it's purchased at 1,000 liters, we'd use the $6.45 because this is our situation. We're using it on a project, so $6.45 would be our cost per unit, and that means our 460 liters times $6.45 would be $29.67 would be our relevant cost of materials. Okay, material B39U. Okay, pause that and think about that for a minute, and we'll go from there. Okay, take a look at this scenario here. This is again on relevant cost. And pause the recorder, read the question, and I'll be back to you in a minute. Okay, so let's look at these various costs here. And our decision is whether we repair the van, or buy a used van. Okay, those are the two options. Cost of van would be a sunk cost, not relevant. Accumulated depreciation, not relevant. A salvage value of the van immediately before the crash, not relevant. Salvage value after the van, 1,000, this would be relevant. Cost to repair the damaged van would be certainly relevant. And cost of a comparable used van would be relevant. So take a minute, put your cost and under each of the alternatives, and we'll come back and make a decision. Okay, so just to wrap this one up here, we have the salvage value after the crash. So we could sell it for that. The cost of repair, that would be an outflow of $5,000. And so if we keep it, it becomes a cost, the salvage value, and then the repair would be $5,000. So the one alternative, repairing it, would be a $6,000 outflow versus a $10,000 outlay to buy the used van. So this looks like we have a $4,000 advantage for the repair option. Thank you.